19 days green in a row. Almost $8,000 made, making just a couple $100 a day on an account that only started with $3,000 in it and was reset daily, meaning any profits that were made were withdrawn to my bank account and the account was reset to 3K. Now, before we dive into system, strategy, trade execution, psychology, all of that, we need to take a look at the stats because what is revealed in these stats is very important. Now, I was not perfect this month. I definitely made a lot of mistakes, and I will be learning from them and adapting to continue my trading progress. Because regardless of how much money you make, your trading is fluid. You're always looking to improve, adapt, evolve. That way you can survive the markets. Now, one of the most important things to take a look at here, trade duration performance. There is almost a one-to-one correlation of how long I held my losers. I don't care about my winners. My losers are the most important thing. There is almost a direct correlation between how long I held my losers and how big of a loss it was. If I were to draw a mean line from break even, it would look like this. Just straight negatively sloping. And this is such a simple idea that so many traders struggle with. It's the fact of, oh, I'm red. Do I cut it now? Do I cut it now? Is it going to reverse? Is it going to reverse? And I don't have to have that thought anymore because I can simply take a look at last month's data and see the longer I held my losses, the bigger the loss was. Now, this is the importance of trading. I'm sorry, not trading. This is the importance of journaling and tracking your data because if I was just trading blind, I would have no idea. The next time my trade instantly went into drawdown, I could have held for 5, 10, 15, 30, an hour, 3 hours till expiration, whatever it may be, right? But my data is clearly showing me the trades that I have the most precise entry on, in which they go in my favor relatively quickly, and I hold for a long period of time, perform much better. Now, this might be a super simple concept. So many traders, especially new ones, struggle with this idea of sometimes I feel like you guys don't realize you may have been right on the move, which is why you're so quick to take profits or to move to break even, or you think it's going to reverse at any sign of sellers or buyers, whatever side you're in. And that's just not it. I mean, if you enter, you have to accept the risk before you enter, be aware of all the potential outcomes, and at the end of the day, relinquish control of what's going to happen, right? You have no control over what the market's going to do. All you can control is your entry, your take profit, and your stop loss. Everything else is outside of your realm. Now, take a look at some of these stats. As we said, $7,000, $7,941. Trade win percentage was 82.86. Profit factor was 4.69. Day win percentage was 100%. Now, this is the one that I really want to talk about because average win loss trade, I would have ideally liked to have this above 1, right? As you can see, on average, it's looking like I made around the same money that I lost. Now, the reason why I was able to make so much more money is because the trade win percentage was high. Now, every month isn't going to be like this, and this makes sense. I understand why it's under 1 now, taking a look at the trade duration performance, because now I know, hey, I impacted my performance and my stats because I held some of these trades for too long, making me take a bigger loss than usual, which is then negatively affecting the stats at the end of the month. So going into this next month, what adjustments should I make? Well, making sure I'm not holding my trades past, stop loss or not holding them, hoping for a reversal, cutting them quick. And then vice versa for my winners, right? Trimming at actual key levels and not just looking at P&L and, oh, I'm up 20%, let me take a trim, right? There has to be a reason anytime we're adjusting our position. It's probably the most important thing. Now, for those of you guys that may not know, I trade a mixed system between supply and demand, order flow analysis, volume by price analysis, and just basic price action. Now, what does this actually look like? Well, it's always going to start off on 2 specific time frames, the 30-minute and the 4-hour. Now, these concepts can apply to whatever ticker you're trading, whether it's the S&P 500, Bitcoin, crude oil, whatever it may be. The concepts I'm going to go over can and will apply to any of those tickers. So I'm always marking out my supply and demand zones, and then I'm also marking out my supply and demand price levels. Now, the difference between a zone and a level is as follows. So a zone is a general area on the chart in which I'm looking for a specific reaction to occur. Now, every single one of my trades, not just this month, but just in general, is one of three. It is either a break retest, it is either a bounce, or a rejection. In some way, shape, or form, every single trade that I take is one of those three. All right, I'm not running iron condor calendar spreads, looking to take advantage of chop or doing any, the IV crush after earning stuff. No, every single one of my trades is either a break retest of supply and demand, a bounce off of supply and demand, or a rejection off of supply and demand, right? And I'm going to get into an example trade using all these concepts, but a mental checklist that I want you to remember. It's called CLC. It stands for context, location, and confirmation. Every single system, regardless of whether it's the one that your grandma came up with or an institutional algo, is operating under the context of CLC. And all CLC is context, location, confirmation. What is context? Context is taking a look at the overall market. What is the overall market conditions? This is where I'm zooming out to the 4 hour and I'm taking a look at, hey, what is going on the higher time frames? Are we in a downward channel? Are we chopping? Are sellers in control? Right? Like if you zoom out to the weekly and you take a look at last April where we had Liberation Day, we had all the tariffs, right? Higher time frame, clearly bearish. First time we were actually, coming down to previous weekly demand and breaking beneath them, right? But then you zoom back out. The second we get above the 6166.5, okay, cool. We just inverse that. Now we're back to a bullish structure on the higher time frames, and we're pushing up, and up. Now I'm mainly sticking to the 4 hour when I'm doing this analysis, so we'll go back to that. But I'm taking a look. Boom, 6353.25. We were consistently putting in lower lows, lower highs. We're in a downward trend. Here, I'm only looking for shorts, right? At the base of my strategy, at the core of my strategy, I'm always looking to place my lower time frame trends in accordance with the higher time frame trend because it's simply a better way to increase the probability of your trade hitting and increase your trade win percentage. It's if you are going with the higher time frame trends in the right manner, I will say, in the right manner, you will see better success. So we're taking a look at the 4 hour. We're seeing we're shifting. All right, very nice bullish action. Now we're doing the opposite of what we were previously doing. We're seeing higher lows. We're seeing a break of the highs. Now let's say you're a swing trader and you're trying to short this and you're placing your stop at the previous high. Well, look what's happening. Your stop got hit, stop got hit, stop got hit, got hit, right? So here is probably the most relevant 4 hour data. 85s was a very nice level that we were playing off of right here, off the 40s. Very nice level we were playing off of. Now, every level that's on my chart, now I haven't updated this for the week. I always do this on Monday live with my students. So that's why some of these are old. But every single one of these levels to the downside is either a valid short target, meaning let's say the market does start to shift to the downside and we are looking for short targets in accordance with where price is on the lower time frames, is either a valid short target, a valid area to look for a bounce, or a valid area for a break retest on the lower time frames to continue following down. Now, I'm going to be completely honest. On this account, I was ripping longs the entire time. I told my students, if anyone comes into the live and asks me what my daily bias is, I was going to airstrike their house in-game, in mind, right? Because look at the higher time frames. I mean, the only way I could see you being confused is maybe near the 85s to where we were kind of moving sideways. But even then, zoom out. This is a historic bull run. And we're thinking the market's going to sell off because we're seeing a little consolidation chop in a almost 100-point range on the S&P, right? So marking out my zones, marking out my levels, using those for context. Context is the overall 4 hour and weekly analysis. The location is using these supply and demand levels. Now, the only indicator that I use is VWAP, which also for me personally does act as a key level. But now let's actually take a look and zoom into the lower time frames, right? So, for an example, for a trade you could have taken on Friday, 72.71.5 pre-market level we had marked out for potential break retest. Happened a little bit too quickly. We were looking to get in on the live with my students around this 950 candle. Unfortunately, Had too big of a reaction, gave us way too much risk, and we had to watch this skyrocket 15 points. So what do? Well, I'm gonna tell you what I don't do. Is all the shit that unprofitable traders do and sit there and bitch and complain and whine and oh my god, the move went without me, and yo, the market's gonna be open for like 5 more hours. Just wait. I mean, just wait. Like, you'll see something. You don't have to rip it right now. So, order flow. The next thing, I'm always looking at the footprint chart and the book map. I love the footprint chart because I love taking a look at the imbalances. I don't use imbalances as my entry triggers. I'll use them as a confluence for my entry triggers. So remember here, we were looking to get off or get in off this 70s level. This one gave us too much risk, and then it proceeded to pump without us. But what's important, we put in a buy imbalance. As we were coming back down, even though we closed beneath VWAP, we respected this buy imbalance. Now, what am I waiting for? I want a 5-minute candle closure above the VWAP, followed by a respect of this buy imbalance. Oh, what is that? We got just that? Okay, where is my invalidation? Because some of you guys be placing your stops in the most random places. Now, there's a couple different ways to figure this out. One, you can look at the book map. You can take a look and say, hey, where is a large passive offer beneath me that has been failing to get hit, because remember, we're looking for longs, that has been failing to get filled, and is it in accordance with my risk system, right? I don't know what size you guys are trading or whatever it may be. Is it in accordance with my risk system, with my maximum dollar amount or point amount that I want to risk, that I can place my stop loss beneath that order, right? Because I don't want price to come, so I haven't do anything there, fail, and then reverse. No, where can I place it beneath that, acting as almost like a wall or shield, and get that entry? Well, here we have that buy and balance, only gives us about 27 ticks. And now, okay, as I'm looking to get in, where am I going to place my take profit? Right, where am I going to do that? Well, one, this is immediate. This is instantly not an A+ setup because we do have a sell imbalance above us. Right, it's still a potential good setup, but we have a sell imbalance in front of us. So before I'm looking to get into this, I'm knowing, hey, one, my stop loss has to be beneath this sell imbalance. Check. Is this in accordance with the higher time frame trend? Yes, we are looking for longs. We're extremely bullish. We have a buy imbalance. It got respected. We were bullish off the open. This could have just been a pullback. We're looking for longs, right? Where's my target? Last target's going to be the opening price, right? Now, technically, you could have went and continued and looked for the all-time highs, but I mean, this is already over 10 points on ES, so I don't know how much you guys are looking for, but I like my consistent chunk every single day. I'm not looking to catch a banger. And if you guys are wondering, this candle was due to some tariff news that came out, so that you literally can't predict. But yeah, so 5-minute candle closes, taps the buy and balance, closes above VWAP, gives us good risk. We enter off the closure of this candle, which beneath VWAP closes above. Now, I'm only going break even once we start getting close to this imbalance. This is why we said this trade would not have been A+, because we do have this sell imbalance in the way. Once we filled this sell imbalance, I would move break even. Now, unfortunately, our break even spot is a little bit near a VWAP, which means, hey, there's a high potential that this comes back and taps it. However, this is just how I personally cover my risk. And more often than not, when I'm waiting for a confirmation, when I'm waiting for something to actually happen on the chart, whether it be a large passive offer get filled on the tape, a sell imbalance get filled, I'm actually waiting for something to trigger my action to move break even, is when I'll do it. A lot of you guys, the trade goes in your way for 2 seconds, and then you're like, oh shit, it's going my way. Let me move break even now. And it's like, dog, give the trade some time to do its thing. Why'd you enter this position if you're already so scared of, oh, I'm going to lose money? Oh, even if you get tapped out break even, this is one trade. You said you wanted to be a trader, right? Okay, well, last time I checked, traders take more than one trade their lifetime, right? Target the previous, or target the opening price, would have slapped, you would break even off here. If you wanted to continue trail, you would continue trailing beneath the previous lows, and then I mean, this candle would have stopped you out. But this is literally how I trade every single day, right? Now, I'm going to transition into talking about options because I traded the account using options, but I know a lot of you guys watching this are probably trading futures, but it doesn't matter. The tool that you're using to gain access to your leverage is, yes, a difference. I want to say that. I'm not going to say there's no difference between options and futures, especially if you're day trading 0DTE. There is a difference, but the concept of strategy is still the same. The system is still the same. The thinking and the thought process and the checklist is still the same. Right? I mean, I don't have a model. I don't have this happens every single day, right? I have a set list of criteria and conditions that have to be met for me to place money with the expectation to make more than I placed, right? If you cannot tell yourself the reasons, right? I want you to listen to me closely. If you cannot explain to yourself the reasons the trade that you just entered should go your way more often than not, why are you in that trade? Why are you putting your money on the line? Why are you risking your account, whether it be personal, prop, your granddad's money, a shark financing loan at 400% interest, right? I don't know, whatever it is. Why are you risking it? And again, this is why I personally use order flow confirmation. And a lot of people ask me, oh, Mark, does order flow work? And I'm gonna duct tape your mouth and throw you off a building in Minecraft if I hear somebody say that, because order flow doesn't work, because order flow isn't something that can work. It's like asking if a candlestick chart works. The question in itself is incorrect. All order flow is a more advanced representation of price. You're just getting more data. So I don't want people thinking, I really like this guy, or I really hate this guy, but he's talking about order flow and I'm going to do it because this works. No. If you do not have a fundamental and conceptual understanding of risk management, price action, higher time frame analysis, and really entry triggers, regardless of what system, what model, whatever you trade, you will never make money. Right? And I'm saying this from the bottom of my heart. I don't have a script up. I really just going off the love of the game here. Now, transitioning towards options. One, the most important thing is differentiating between, position sizing and risk, right? Your position sizing when trading options does not necessarily mean your entire position size is your risk. If you only want to lose $100 on a trade, you can still enter with a $1,000 position size and risk only 10%. Now, would I recommend trading 0DTE for that? Probably not. Maybe go a couple days, further from expiration, so your delta's a little bit lower. But you can still do that. This was the number one misconception I had when I was trading live on this account, right? I was telling people the position sizing I was entering, whether it was around anywhere from like 750 to 1,000, and they were like, "Oh, I don't have that much money. Oh, I can't risk that much amount." And it's like, I'm not risking the whole $1,000. I'm risking like a couple $100, right? And I know my system. I know it's in a very profitable market regime as well, to where we're consistently just blasting to the upside, which is another thing. When you know the market, or not know the market, but when you have a very strong conviction in higher time frame market direction, and then you look to fade the lower time frame trends by looking for a pullback into an area to where buyers were previously present, and then you look to long following the higher time frame. That's how you do it. That's how you increase your win rate. That's how you increase your likelihood of your trades hitting. Mind you, you do need proper risk management, right? Stop loss and invalidation is absolutely everything. If your stop loss is not at invalidation, you are essentially just gambling, right? There has to be, this is where the understanding of price action and structure really comes into play. Understanding, as basic as it sounds, higher highs and higher lows, because even if I zoom out to the weekly or whatever you want me to zoom out to, and it sounds so simple because it kind of is, all a trend is the formation of higher highs and higher lows. Now, I'm not some guy who's sitting here telling you, oh, you see a higher high, you see a higher low, go ahead and just instantly go long. No, it's more complicated than that. But it's at its basic monkey brain baby level. That's what it is, right? Now, the reason why I'm stressing position sizing and risk so much is because a lot of you guys are letting this fear of trading a personal account stop you from trading a personal account. And instead, what you're doing is spending thousands, if not tens of thousands, on evaluations accounts that you are full porting, not taking seriously, not being patient or waiting to copy trade, because that's honestly the biggest pro of prop firms is copy trading. And you don't understand that the biggest advantage of those prop firms is that you don't have any realized losses. When I'm trading my personal account, when I was trading this challenge, anytime I took a loss and I realized that loss, any profits I made on the next trade weren't actually profits until I recouped those losses, right? You have an advantage. Now, I'll talk about that in a different video, and I want to kind of shift back to my data here. And I made almost $8,000 this month trading an account with $3,000 in it, right? I'm not full porting it every single time. I'm not looking for huge bangers. I mean, here, even ignore Friday. Friday was a really good day, $769, right? Let's ignore that. So that would put us at about 1.1K. Imagine what an extra $1,000 that week could have done for you. You don't need to make $10,000 every single day. This shit compounds. If you make 200, 400, 600, like if you make $200 a day, that's $1,000 a week. And I know it's hard. I'm not saying you're gonna make $200 every day, right? I mean, I had some of my best performance in analytical trading this month, right? I mean, like I'm gonna toot my horn a little bit. I feel like I popped off, but the fundamentals of what I'm trying to tell you guys remains the same, right? And I wish you guys believe in yourself as much as I believe in you, because I know if I could do it, you can do it. But you're gonna have to put in the time and dedication and have the confidence to believe in yourself. And you actually have to learn the things I'm telling you about, right? I'm not gonna give you some BS psychology, morale boosting speech if you don't know what you're doing. Seek guidance in the areas in which you do not understand, because your trading will fall apart if you do not, right? Even if you had a month like this, but you don't understand proper scaling, proper risk management, proper trade management, it can all get wiped out in literally a matter of days, right? I know I kind of went on a rant or a tangent, but what I want to close it off with is, if you have the ability to start a small account, I highly recommend you do, just so you get a grasp and feeling for what it truly feels like to trade your own money. Your trades, in my opinion, will never be more precise and more analytical when your money is on the line, but it can't, that feeling can't be rooted in fear. It has to be rooted in confidence. Even if you took a fraction of the trades that I took this month, or made a fraction of what I made, imagine what an extra $500-$600 could do for you each month, right? Even if you're just making, let's say you're entering a $500 position with a 20% return, which is fairly easy to do on a daily basis, trading options. It's $100 a day, and let's say you did that for 4 days out of the month, an extra $400. Imagine what that does for the average American. It's life changing. So I don't want you to look at my monthly stats or my monthly P&L and think, oh my God, he made 8K, like I could never do that. Focus on what's going to be important for you, what you need, right? It's different than what you see on social media. You don't need to be floating $23 million in no position or buying a Lambo. The reason I wanted to make this video is to show you guys you can do it.